Hello and welcome to another episode of Trust Issues. Today I'm sitting down with Richard Horlick, Chairman of BH Macro, to talk about the opportunities for investors in the hedge fund sector. Richard, thank you so much for joining us today.
No, not at all. Absolute pleasure, William, and talking about one of my favourite topics, BH Macro.
So how long have you been involved with BH Macro?
I was appointed to the board in May of 2019, so about 5 years.
And what experience do you think you brought to the board when you were invited to join?
Well, at the risk of betraying my age, I am a slight dinosaur. So I've been in the city now for, in fact, over 44 years. And I was previously the Chief Investment Officer, Head of Investment worldwide for Schroders PLC and on the main board there. And I had also worked for many years for Fidelity as President of Institutional Business outside the US and also within the US as the President and indeed the Chairman of the Fidelity Management Trust Company, which is the trust bank for the US mutual fund range. So with those organizations, I oversaw quite a large number of closed-end funds. I've also overseen a number of trading strategies. I've been chair of another hedge fund. I've been an advisor or on the board of hedge funds. Way back in 1984, one of my first fund management roles was actually managing Bob Investment Trust for Newton. So about 40 years experience now, so about 35 years experience directly of the closed-end fund sector when I joined the board.
Gosh, that's an impressive CV. No wonder they asked you to be the chairman.
If I can interrupt, I would like to apologise for what sounds like blowing my own trumpet, but you did ask me the question.
Absolutely. No. It's a weighty position with weighty responsibilities. So it's good that you've clearly got a lot of experience to bring to bear. Were you a shareholder before you came on the board?
In fact, I wasn't a shareholder. It was something that I've been looking at. And so it was very easy when I became a member of the board to start to buy the shares.
Some of my fellow analysts in the sector talk about skin in the game, which is effectively the positives for shareholders of having members of the board being aligned by also being a shareholder. I think it's publicly known that you've got a considerable stake in BH Macro, which would suggest it's more than just a sort of token investment because you're on the board. And as a seasoned professional investor, what do you see as the attractions of BH Macro to you personally as a shareholder?
Well, I think the main attraction is that it does what it says on the tin. And for me, it's a very significant part of my own pension fund. And the reason for that is because what it delivers is a very consistent long-term rate of return with a relatively low level of volatility. The master fund which it invests in has about half the level of volatility of equity markets. And at the same time, it has a very low correlation to both bond markets and equity markets. It's not inversely correlated. It doesn't mean that every time bond markets or equity markets fall, it will go up. But since inception, which is quite a long period of time now, of the 20 worst months for the S&P, it's been up in 15 of those months. And the other thing from a risk point of view is that they really focus on the convexity of returns, which is a slightly complicated way of saying when things go in their favor, they may go up in a month by high double digits or even 20%. And when things go against them and they go wrong, they'll go down, they will be negative, but maybe a few percent. And indeed, the worst performance would be about 5% in a single month. So when you look at the annual returns, what you don't see from the master fund is any significant, in fact, in the lifetime of BH Macro, I think only 3 years in which it's given a negative return in the portfolio, 2 of those very small percentages. So it's absolutely ideal for a pension fund, for an ISA, or for anybody who's looking to put money away and steadily accumulate wealth over time, knowing at the point of time that they need to realize that they probably won't be experiencing any significant downside return.
That's interesting. And I guess in view of what you've said, some wealth managers I've spoken to in the past say that they own BH Macro for their sort of higher risk clients, which in view of the low volatility returns that you've described, slightly confuses me. How do you think about investment risk in general terms and with respect to BH Macro?
Well, I think the biggest difficulty that anybody has from the outside in analysing BH Macro is that, as the name suggests, it's a macro hedge fund. And what that means is that you have a very large number of traders taking positions largely through derivatives, or indeed entirely through derivatives, in complex financial instruments. Some of them relatively simple, like simply interest rates or exchange rates, others of them more complex. And as a result, there are a very large number of positions held in BH macro, and those positions may change even on a daily basis, depending on what happens in those markets. And that's very different to, say, a plain vanilla Japanese equity fund where you can see the underlying portfolio and those positions may well be held for many years, or indeed other, if you want to call them capital preservation funds, where they might hold gold, they might hold index linked. But again, the portfolio is very visible. So what one has with BH Macro is the necessity to have an act of faith to invest in what is a relatively opaque portfolio, but which has this tremendously good long-term history of returns with very low volatility. But of course, our regulators will tell us that past performance is no guide to future performance, and so therefore, that proof of return is not something which can be accepted. So it is high risk in terms of the perception of risk. And also, I think that because it is a relatively high fee product and because it has a performance fee, the higher the returns it delivers, the greater the fee that the client pays. Admittedly, the return is after all those fees. But even so, until very recently, that made it a very high fee building block in a portfolio, which, given the disclosure rules, was quite difficult for a lot of the wealth managers, I think.
So maybe what they're talking about is, rather than being in higher risk clients, is actually clients who maybe are a bit more sophisticated, possibly. But I suppose BH Macro has been running itself since 2007, and so whilst past performance can't be relied upon, you have got at least a long track record of returns to look at and reassure yourself that it's not such an act of faith to own BH Macro.
Well, I would agree with that, and that's why, as I say, I have it as a very significant building block for my own pension.
I guess you were a member of the board since May 2019, and so you experienced 2020 with Brevan Howard close at hand. In that year, BH Macro delivered extraordinary NAV returns, specifically during March 2020, which I think was their best monthly return ever. They were up 18% when the COVID crisis was first felt in markets and equities were absolutely tanking. What are your memories of this period as a member of BH Macro's board? And do you have any insights to what was happening within Brevan Howard's trading and risk management teams?
Well, it was quite a difficult period for me because I think I was one of the first people in the UK with what was then undiagnosed COVID. And I spent 5 weeks with a strange inflammation in the John Radcliffe Hospital during January and February.
So you weren't glued to your Bloomberg screen, clearly.
For a large period of that time, absolutely not. I had all sorts of tubes coming out of all sorts of places. But I think if we move on from that, I think that what happened in March 2020 is exactly what one would hope would happen and one should expect to happen with BH Macro, which is that there were some pretty wild gyrations in global equity markets and bond markets and all the kind of macro positions which BH would be looking at. And as a result of the convexity of returns, which I talked about before, that kind of flight of stairs where things go in their favor, they produce this very high double-digit return in 1 month. And the great thing is, then they didn't give it back. And I think a lot of people fail to understand the power of compound interest. When equity markets go down 50%, they've got to go up 100% to get that back. So one of the things that makes something like BH Macro so attractive during that period of time is when they have their tremendous returns, they effectively bank that 20%. They might have a very poor month and go down 2, 3, 4%, but they're not giving back a kind of 20% gain. So they just steadily accumulate returns. I mean, in terms of what's going on within Brevan Howard, obviously I can't comment in individual positions and so on and so forth. But I think that the sorts of returns that they achieved then and other times of crisis really do demonstrate not only the advantage of the low correlation to bond and equity markets, not only the diversification of the positions they take, but also the value of the extremely sophisticated risk management systems that they have in place, which were very valuable in 2020 and indeed in some other years as well.
And the flight of stairs or flight of steps pattern of returns, maybe you could talk a bit about that.
Well, yes, that's particularly for the underlying master fund. Now, whenever you have a wrapper like a company around a fund like that, there is a degree of volatility which can come from the company going to a significant premium or falling to a discount. Not necessarily because of the returns that the portfolio is achieving, but sometimes external events, the nature of the market, fears and rumors about things. But what Brevan Howard's master fund has done and continues to do is just offer these very attractive, relatively high returns with approximately half the volatility of the equity markets.
And I think 2022 was very strong for Brevan Howard during a period where equities and bonds had struggled. Then returns up until last month actually have been quite a bit more muted since. Well, obviously global equities have roared away and the S&P has reached new all-time highs. So why should investors own BH Macro when markets are so risk on?
Well, that's a good question. And I think without sounding too much like a politician, the answer to that is that, again, in 2022, you saw that lack of correlation to the bond and equity markets and delivering these very high returns. And then we've had a period of time where, although returns have been within the expected range for the portfolio, they have, as you say, been quite muted until actually the last few weeks. And in fact, we printed the numbers this morning, and November was an extremely good month for the fund. And as a result, this year is looking like being a good year, not a huge double-digit year, but a very satisfactory return for shareholders with a very low level of risk. And I think this is one of the things that investors need to be patient, because if you're ticking along, making 3, 4, 5%, that's quite a nice return to have, particularly if it's much better than cash at the time. And then every so often, BH Macro will have these very good months or these very good years, which just push its returns up, as I say, with this very low level of risk.
So I suppose it's ignore the excitement in the other side of the pond and focus on the product. Do you think that's part of the reason that the investment trust sector generally is trading at sort of wide discounts?
I think there are a lot of difficulties with the investment trust sector, and partly it goes back into history, with the original Robert Fleming setting up all these things to enable people to invest in sort of jute plantations in the East Indies and build railroads and canals around the world. And closed-end funds really should be a wrapper which enables the individual investor to get access to something which they couldn't usually do. And that's why so many things like infrastructure funds, renewable energy, and indeed hedge funds are a natural home for a closed-end fund. The individual investor, the mythical dentist in Liverpool who's looking to invest his own personal pension fund or his ISAs, can't possibly go to a macro hedge fund which accepts clients with 100 million portfolios. So the only way they can do that is to invest through a closed-end fund. And the nature of the UK stock market has been that the closed-end fund market has slowly become the preserve only of the wealth managers. And the wealth managers themselves have been steadily consolidating. And as a result, you've got this tremendous concentration of the share registers of the closed-end funds. And then when you get a change in manager at a particular wealth manager, or you get a merger, as we had at BH Macro between our largest shareholder and another one of our very big shareholders, you can get an overhang of stock. But if you've got a good closed-end fund, it's probably held already by every single wealth manager. So it's quite difficult to find the new buyers to soak up that overhang of stock as and when it occurs. And so you've seen this year, particularly with the tremendous concerns that a lot of individual investors have around the effects of government policy, not just on the economy, but in terms of taxation, their own personal position. You've seen an awful lot of selling pressure come through. So all these things have pushed closed funds out to very wide discounts. And although BH Macro currently has a discount of around about 10%, which is relatively low compared to others, it's still very high compared to our long-term track record. And we've put in place a buyback program to try to soak that up. But what I would say to investors, at the risk of sounding a little bit like Leary, who every time he's asked when the Ryan share price goes down, what does it mean? He says it represents a wonderful buying opportunity for investors to get the company cheap. And the great thing is that when BH Macro sits at a 10% discount, it is a way of buying it and having the expectation, or I should say hope, not making a forecast, the hope that it will return to around about trading at par, which means that an investor gets effectively 5 years management for free.
Well, that sounds pretty convincing. What are your impressions of Brevan Howard as a business, and what in your experience makes them stand out in the hedge fund world?
I think the thing that really makes them stand out is the combination of the longevity of returns that they've achieved. You often see hedge funds which will have a period of time in which they do well and then things go wrong. But Brevan Howard has just consistently made these excellent returns for their investors for a 20-year period with, as I say, a relatively low level of volatility and also extremely uncorrelated to bond and equity markets. I think that comes not only from the rigorous investment process, but also from the really deep focus on risk management and building, as I say, this convexity of return so that when things go well, you really do get the payoff of their positions. And when they get things wrong, and every investor will from time to time get things wrong, because you have a large number of different decision makers, they don't all get it wrong at the same time. And also the risk management means that that downside return is about a quarter or a fifth of the upside return they achieve. And then that, as I say, leads back to that flight of stairs. You just steadily keep making money over time. Maybe in a number of years, not very large amounts of money. But if you're holding it for your pension fund, if you're holding it for your ISA, if you're holding it for your personal long-term savings, and for the personal investor, I would also add, it doesn't have a dividend yield. So it's all capital gain, which can be held for the long term.
I suppose one of the things that makes them different is that they're pretty unique in having an investment trust access point for retail investors, which is part of the reason we're talking about them. One final question. What are the challenges that retail investors face in general over the medium to long term, and how do you think macro fits within this outlook?
Well, I think I better dodge any political statements around what individual investors face, and obviously it depends very much on their own circumstances. I think the biggest challenge is that we've had this tremendous bull market. Even if you take into account the financial crash of 2009, we've had this period of steadily falling interest rates ever since Volcker went to crush inflation in sort of 82, 83, a period which I remember. And people forget that US interest rates were pushing up towards 16% for US bond yields. And we've had these great returns. And the question is, can equity markets deliver those returns in general from here? And equity markets and bond markets have become steadily more correlated. But also the equity markets have become much more concentrated. So you see, although the US market has performed very well, it's been driven by what's called the Magnificent Seven, the Big Seven technologies. And the US market has hugely outperformed other markets. So the question for investors is, what's really going to give them that good long-term rate of return? I would say it does.
Fantastic. Richard, thank you so much for joining us today. It's been great hearing your views on the world.
No, not at all. Absolute pleasure.
Well, on that note, I'd encourage you all to visit the BH Macro website to find out more information about the trust. But there's also a wealth of information on the Kepler Trust Intelligence website, including our latest research note on BH Macro. Thank you all for listening, and I hope you'll join us again soon for another edition of Trust Issues.
Past performance is not a reliable indicator of future results. The value investments can fall as well as rise, and you may get back less than you invested when you decide to sell your investments. It is strongly recommended that if you are a private investor, independent financial advice should be taken before making any investment or financial decision. Please be aware that there can be a time lag when we release podcasts, meaning time-sensitive information may no longer be accurate at the time of publication. We try to provide content that is true and accurate as of the date of recording. However, we give no assurance or warranty regarding the accuracy, timeliness, or applicability of any of the contents. Kepler Partners LLP has a relationship with some of the companies covered in this podcast, which may impair its objectivity. Any views expressed in this podcast are those of the individuals expressing them and do not necessarily reflect the views of BH Macro Limited, Brevan Howard, or Kepler Partners LLP. Kepler Partners LLP is authorised and regulated by the Financial Conduct Authority.